Adobe stock, ticker symbol ADBE. This stock is down almost 24% year to date, and since their all-time high late in 2021, this stock is down 37%. But PE ratio is still at 42, and the 5-year PE ratio is also looking high at 55. This could mean Adobe is overvalued based on the PE ratio for a long time. But to be honest, aside from that, this stock is amazing. But before telling you more, I will show you everything you need to know about the company Adobe. I will show you what they do, and in the end I will show you my fundamental analysis to see if Adobe stock is to buy or not. I'm very excited to see what you guys think about this stock, so please let me know your thoughts in the comments. My name is Thomas and this is Thomas Invest. I'm an investor looking for great stocks at great prices. Please subscribe to join the community and to receive multiple analysis every week. I will tell you everything you need to know about the stock market. What does Adobe do? So, Adobe provides content creation, document management, digital marketing, and advertising software, and in the last one, service to creative professionals. Adobe is most known for programs such as Photoshop. I've been using the Adobe programs for almost a decade, and I personally love the programs. To me, they are one of the best out there, and I think they have this big moat. There's no other company like Adobe in my opinion. You have the smaller competitors, but Adobe is by far the market leader. Adobe has 3 revenue segments: digital media, digital experience, and publishing advertising. Digital media is by far the biggest segment with 73% revenue share, and this segment is growing at a steady and consistent pace. Digital experience has a 25% revenue share and has a slightly higher growth pattern. The last segment, publishing and advertising, only has 2% revenue share and is decreasing over the past years. When checking the revenue by geolocation, we see that Americas is by far the biggest with 57% revenue share. EMEA is sitting at 27% and Asia is sitting at 16%. All locations are growing at a steady and consistent pace. In the latest earnings announcement, they said Adobe's second quarter fiscal year 2021 target factor in current macroeconomics and geopolitical conditions. This refers to the problems they face right now, since they put a hold on Russia and Belarus. So this could influence the earnings, of course, and is something to keep an eye on. Now that we know more about the company Adobe, it's time to check the historical stock price of this company. Earlier in this video, I showed you that this stock is down 37% since their all-time high, and PE ratio is sitting at still mid-40s. On the 5-year chart, we see that Adobe is up almost 200%, while the S&P 500 is up 68%. So you easily beat them, the S&P 500, in the past 5 years. But since their all-time highs, the return is cut in half, because it was sitting at almost 400% return back in late 2021. On the 1-year chart, we see that Adobe is down almost 13%, while the S&P 500 is down only 2%. This all started late 2021, where the stock went down. On the 6-month chart, we see that Adobe is down 30%, while the S&P 500 is down 9.5%. But on the 1-month chart, we finally see that Adobe is up 5%, while the S&P 500 is down 1.6%. So it seems they finally recovered. They also will present earnings this month, which could be a huge impact on the stock price, of course. When earnings are disappointing, this stock will fall down big time. And to be honest, that's something I've been waiting for a really long time. I love this company and they have great fundamentals, but the valuation is too high right now. So the best thing for me is the stock price going down roughly 30 to 40%, which is a lot. So with that being said, let's check why I think this is a great company with great fundamentals except for the valuation. Adobe is a 188 billion market cap company with a PE ratio of 40. The forward PE ratio is sitting at 29, which is more in line with what I want to pay for this company. A company with a big moat, which is growing in a steady and consistent way and also at a high pace, is worth a PE ratio of 30, I think. So from here it needs to drop around 30%. And for those who say it can happen, it already fell from 68 to 40 PE ratio. So another 30% down could easily happen when earnings are disappointing or they announce a weak outlook. Next up are the margins. Adobe has a 36.7% operating margin and a 29.9% profit margin, which is really high and also growing nice and consistent in the past couple of years, except for the latest quarters where margins went down, so that's something to keep an eye on. Return on assets is sitting at 18%, which is really good. Return on equity is sitting at 34% and return on invested capital is also sitting at 34%, which is really high. And please check the 5-year return on invested capital. It's sitting at 24%, which is really good. Next up is the income statement. The 12 trailing month revenue is sitting at 60 billion and they have a quarterly revenue growth year over year of 9%, which is really good. When checking the revenue, I think it's very interesting to see they changed the business model back in the years. From 2010 to 2016, revenue was nearly flat. But after 2016, the revenue tripled, which is really great to see. Next up is the balance sheet. Total cash is sitting at 4.7 billion and debt is sitting at 4.6 billion. So they are capable of paying down all the debt with the cash. This is something I love to see about companies this big. For me, it's also very important that free cash flow is growing at a steady and consistent pace. Since free cash flow is used to pay down debt, of course, but also to do acquisitions, buy back shares, pay dividends, and research and development. In this graph, we see that free cash flow has skyrocketed the same way as the revenue. Since 2016, it grew big time, so this looks really good to me. They have plenty of cash to pay down all their debt, but also to buy back shares. And in this graph, we see they do a good job here. Shares outstanding are going down nice and steady, and this is really important because EPS will go up. And this makes your share more valuable. And in the end, the stock price will go up and PE ratio will go down. In the past 5 years, Adobe bought back roughly 5% of the total shares outstanding. And this is where it gets difficult. Normally, I would love to see a higher number here, around 10% share buyback. But since the stock is overvalued in my opinion, I don't want them to buy back a lot of overvalued shares, just to see the stock price go down every time. So for now, I think the 5% share buyback is good, and whenever the stock goes down to a more fair value, I think I would love to see a 10% buyback at least. My final conclusion is that I really love this company and also the stock, except for the valuation. Based on the PE ratio, they are overvalued and need to drop another 30% before I want to buy this stock. But aside from that, I literally love everything about Adobe. So right now I can't wait for the earnings and hopefully the stock goes down big time, so I can finally buy this stock because this is one I really want to own. Of course, when the stock goes down around 30%, I will do a fundamental analysis again to see if they are a buy. And remember to always do your own research and never fully trust on what I or other YouTubers say about a stock. I'm not a financial advisor and this content is just for entertaining purposes only. I hope you liked this video and I did bring some insights of the company to you. I would really appreciate a thumbs up and make sure to subscribe to get notified when I'm posting a new video. Thanks for watching and I will see you in my next video.